the Japanese legal system, specifically in private law area, is extensively influenced by the German law, while French law principles can be found in some areas as well. This development leads back to the Meiji period and end of the 18th century, beginning of the 19th century. But it must be, of course, emphasized that the Japanese law is not an imitation of these systems, as it has maintained own rules, legal understanding, sense of justice. First, the insurance market is, of course, one of the largest in the world. We know that the life insurance market is the second place in the world, and the non-insurance life markets, I think, third or fourth place. We have, comparing to other countries, very little companies working in the insurance business. According to the FSA, last year it was 42 life insurers doing business here in Japan and almost 55 non-life insurers. And there are total 22 or 23 foreign insurers doing business here in Japan. So that makes it actually, if we exclude the foreigners, less than 100 companies. Within the EU, the most insurance companies are in France, with more than 450.
You have just heard from Köksal Sahin, a lawyer with KPMG Law in Germany, currently seconded to KPMG Japan. Köksal has earned his PhD in comparative law by analyzing Japanese insurance law, identifying influences and contrasting it with other jurisdictions. By working internationally, he has also developed a nuanced appreciation of the Japanese insurance market. So let us dive right in.
Good evening, Köksal. Welcome to the show.
Good evening, Norbert. Thank you very much for inviting me.
It's fantastic. We've been discussing this for a while, talking really in depth now about Japanese insurance law. And to start with, the obvious question is, where did these three vectors meet in your life? What's the root of your fascination and so much work put into understanding Japanese insurance?
The reason why I chose a Japanese insurance law is due to my background. I studied law and Japanese law, including long-term stay here in Japan for studies and research, working with Japanese law now for more than 20 years. And not only academic level, but also with legal practice as an in-house lawyer or lawyer advising clients with German, Japanese, and EU Japanese business. Among them, there are also some insurance companies from Germany who want to invest in Japan, or vice versa, Japanese companies who actually invested in Germany, for example, and life insurance company, and advising them on different aspects regarding legal framework and business cases. When you ask me why insurance law, as for the insurance law, I earned the expertise actually in the Japanese insurance law writing my PhD in comparative law about 10 years ago, comparing the Japanese, German, and UK law about the duty of disclosure of policyholders, which is duty for policyholders upon concluding an insurance contract, which is absolutely indispensable for insurance undertakings for their risk assessment. These three countries all had one thing in common, namely changing, adapting the old regulations and provisions to the actual and legal changes of the past years. We would also say for the past century. Regarding the mentioned duty of disclosure, you can see in all countries, as well as in Japan, a change of principle in the way that the policyholder now must answer questions honestly regarding the covered risk, which the insurer asks him, whereas previously the policyholder had to voluntarily disclose the information. And it was quite difficult because consumers have no knowledge about insurance interest, risk assessment, etc. This work based on Insurance Law Act, which came into effect in Japan in 2010. That's why it's also called New Insurance Law, in Japanese Shin Hokenho. It contains less than 100 sections regulating the insurance contract regarding life and non-life insurance contracts, mainly consumer contracts. This new act replaced the old provisions, which have been in the very old Commercial Law Act that was replaced in 2006. However, for marine insurance, etc., the provisions are still in the Commercial Law Act. Why is the origins of the Japanese insurance law or the history? Why is that so important? As a German lawyer, is that the origin of Japanese law is based on the undisputed fact, actually, in the legal doctrine and historical development that the Japanese legal system, specifically in private law area, is extensively influenced by the German law, while French law principles can be found in some areas as well. This development leads back to the Meiji period and end of the 18th century, beginning of the 19th century. But it must be, of course, emphasized that the Japanese law is not an imitation of these systems, as it has maintained own rules, legal understanding, sense of justice. You can see it, for example, in family law or in law of inheritance. However, if there are listeners from the American law areas, the commercial area, specifically company or commercial law, is merely influenced by the US legal system since the big commercial law reform in 2006, which replaced the German law principles existing for 100 years. And as a matter of fact, we can say that the Japanese law is influenced by these areas of law. Civil law, which means the continental European principles, as well as the case law, which is the Anglo-American principles. And you can find this development completely also in the Japanese insurance law reform. That's why I made a research for almost 5 years and wrote my PhD regarding these three countries.
Wow, that's excellent. I'm thinking about it 10 years ago, without the tools that we have today for translation. Getting through that in foreign languages is both demonstrated excellence in Japanese language skills as well as legal skills. That must have been some tough lessons along the way, learning the language in that specific context. But I'm sure this is something, it's like riding a bicycle, probably. You're never going to forget that again.
From the German law point of view, it is obviously not so difficult to get the knowledge in Japanese legal system. Of course, unless you cannot speak Japanese, because the most things are in Japanese. But I remember when I learned Japanese and Japanese legal system and the law, we had discussions with Japanese lawyers and Japanese professors here. They speak very good German. It shows also the connection between Germany and Japan in this area. We have to admit, of course, that also French scholars, for example, or lawyers are also doing exchanges with Japan, which also shows there are significant similarities between both countries as well regarding the legal system. But I also know that the American colleagues, they have also quite a big interest in the development of the Japanese law, because as I mentioned before, there are also some US legal principles, influences in Japanese law, which you can find merely after the World War II development, for example. And this is also why this Japanese insurance law reform was not conducted coincidentally. In 2008 was the procedure, in 2010 it came into effect, and prior to this, the German insurance contract law was amended and renewed due to the fact that it was also about 100 years old, and provisions were missing, and many principles were made by court decisions. Following these changes, the Japanese legislator started actually at that time to establish a law commission to say, okay, please assess the status quo of the current regulations and provide us recommendations for any amendment and modernization. That's why this reform was not coincidentally. At the same time, also UK made these changes as well. A bit later, it was 2016, I guess, when the new Duty of Disclosure Act came into effect, and they also changed many principles. Because you have to imagine, if you have a legislation which is 100 years old, for example, take the life insurance, there are much more health problems nowadays than 100 years before. So we have to cover this all if you do an insurance contract. So crystal clear that you have to amend and adapt the legislation to cover all the issues which occur in the past 100 years.
Yeah, it's quite a massive change. And you said that all these, the American, the French, the German law influenced the Japanese law, but obviously it's not a copy. So let's stick to Germany, for example. If you take the German law today, as it is promulgated, and the one that is in effect in Japan, and compare them, how would you characterize this?
If you take the German Insurance Law Act, for example, it has about 200 or 300 sections. If you take the Japanese one, you have less than 100. The question is it flexible because it's less than 100? Some principles, some provisions, regulations can be done between the policyholder or the insurer, for example, or is it because the Japanese legislator missed some regulations if you compare the other areas of Japanese legal system, which also have been influenced, specifically the Civil Law Act in Japan by the French and the German ones, they include or contain almost everything what the German regulation contains. The French situation is a bit different because there are some parts of the civil law which is based on the French law, not the complete law or the how it is set up, for example. But the thing is that also there you will find 1,000 sections in the Japanese law. And if you compare it with Germany, you have 2,500 sections. And in France, there are lots of sections because there's a different setup. The Japanese one, you can say it's flexible because you don't have so many provisions, so you can deviate from this or can make everything by the contract, by the conditions, but it is actually completely different because the new law has specifically provisions which are mandatory. That means the insurer cannot deviate from these regulations in its contracts. So the same thing is also in Germany. They have also the mandatory provisions, and it's the insurer is not allowed to deviate from this. And then in France as well, and in the UK, I think it's the same situation. I remember that a part of it says that this regulation is mandatory. If you have mandatory provisions, you are not flexible, right? So you cannot deviate from these regulations. But in some areas you can because it's non-mandatory. And this opens for the insurers, of course, the possibility for their product development, but also they have to consider the mandatory provisions. They are not so flexible in some parts as well.
Got it. Thank you. So if I take an operational angle, then say some of your clients clearly are international businesses. If you had a European insurer wanting to establish an insurance business in Japan versus a Japanese insurer establishing operations in Europe, is this equally difficult on those sides?
It is not equally difficult, but it's difficult for both. Let's start with the Japanese insurer who wants to do business in Germany. He has many opportunities. One opportunity would be to invest in an existing German insurance company, for example, which we've done for the insurer, I think 7 years or 8 years ago. They invested to a German insurance company. But the problem is, in that case, they have less than 15%, the German company. So if they want more than 15%, we have EU regulations, which regulates then that the solvability of the mother company here in Japan must be considered in the business in Germany. That is an issue for the Japanese companies to say, okay, I can only invest for a maximum of 15%. The second possibility would be that the Japanese company establish or set up a subsidiary in Germany. And in this case, if they do a subsidiary in Germany, they have to provide a percentage of their premium income, which is in Japan. They have to move it to Germany because Japan is outside EU, which means there's a third state in this sense. This is also, and of course, a problem for Japanese companies who have their premium incomes here in Japan. These two aspects you have to consider as a Japanese company if you want to do this in Germany. Whereas if you compare the German ones who wants to come here to Japan, the Japanese legislation is quite strict, which is actually not a big issue because the Insurance Business Law Act is also based on the German Insurance Business Act, the Business Law Act. So there are quite big similarities. So for a German company, it would be easier to access the market in the sense that they know the regulations here in Japan. However, there are also many different provisions and regulations which have to be considered. One is, for example, the Japanese insurance business law, which also regulates the solvency of a company. For example, the solvency margin ratio, which we call SMR. And this is actually an indicator used by the supervisor, which is here in Japan, the Financial Service Agency, to ascertain the extent to which the insurance company, of course, can meet payment obligations in the event that risk exceed the normal anticipated level. The Japanese one is a bit different because in Germany and in Europe, we usually have the Solvency II directive, which is in Germany also to the German law and the German insurance business law as well. Because in the European Union, they have a different way of doing this solvency regulation in the company. However, and this must be also here emphasized, that in 2019, the FSA set up an expert commission with the task to make a proposal for a new solvency regime. In 2020, there was a report of this expert commission, and they recommended, similar to the Solvency II, an economic valuation of the insurance company, and based on that, to provide the solvability of the insurance company, which means that the Japanese legislator, the government, is thinking about to introduce as well, like in the Solvency II regulation in Europe, a three-pillar system. Based on that, the solvability can be assessed. So for German companies who wants to come to Japan, there's also the same, like the Japanese one who's doing business in Germany, they have to set up a subsidiary here in Japan, because otherwise they are not allowed to do business here and cannot make insurance contracts. The other possibility would be also, as mentioned before, for German insurance companies to invest in Japan for Japanese insurance companies who are already in the market. In some cases, the investment was also regulated to a certain percentage, but this was also amended some years ago to give the possibility to the insurance companies to buy, for example, insurtech companies, to not only cooperate, also to buy them and to proceed with insurtech.
Understood. Thank you. Now that they've established our entity in the respective countries, let's move to the product level, and that takes us also a bit to the market structure. But once you have a license, the regime that governs how to modify products or launch new products, what are the similarities or differences in that space?
New business products, if a product is brought to the market, it depends on what kind of product it is. If it's a compulsory insurance product, the conditions might be the same as it's provided by the law and legislation. There are some examples of conditions which insurers can use and adapt to their business. Some insurance products in Japan have to be approved by the supervisory authority. It's the same in Germany. If you have, for example, fake products which are under certain regulations which has to be met, these products are also approved by the German supervision authority. If an insurance product is also under the section General Policy Conditions or Statement of Business Procedures, etc., if they request for approval for a product by the insurance company, the supervisory authorities examine whether it complies with the standards prescribed in the Insurance Business Act or by the Insurance Contract Law, the insurance law which came into effect in 2010. As I mentioned earlier, because there are mandatory provisions, and they're checking whether the content of the contract entails the risk of lacking protection for policyholders. This is the one big issue in consumer contracts, specifically to check if it contains any unfair discriminatory treatment or whether the content of the contract is harmful to public policy and good morals. For example, it is mentioned here in Japan. In Germany, we don't have this good moral thing written in the legislation. However, in some cases, this will be also considered while approving the product. And the provisions or the terms and conditions have been approved by the authorities can be, of course, used for the insurance and provided to the policy.
Now, if I take it one level further to a concrete example, because you mentioned InsurTech, one of the most popular products in the InsurTech, blockchain, smart contract space for a number of years has been this flight delay insurance, because it's simply set up as just being parametric, right? The contract monitors the departure time, and if there's a delay beyond a certain threshold, then the policyholder gets paid. Is that a product that's feasible also in Japan?
I heard about this product as well, about this flight delay. We have a similar situation or products provided in Europe, not merely in Germany, but in other countries. If the product would be provided via the website or via the contract with the airline company, and the airline company works together with an insurance company and provides this insurance for passengers, respectively for the policyholder. It depends on if there is an intermediary situation between this airline company to provide the passenger a flight delay insurance which is covered by the insurer. In this case, the airline company might need to get a license to be an intermediary. This is similar to a case which has been decided in September last year by the European Court of Justice regarding a German insurance company. So it must be assessed case by case. If the situation shows an intermediary activity which would result that the airline company might need to get an intermediary license to provide this flight delay insurance.
Then in Japan, you actually need to incur the loss. So you need to have the cost associated with the delay. So
Correct.
it can't not be a bet that you just think this is a frequently delayed flight and you don't really have a
Correct.
financial impact, but you collect the money on the policy.
That understanding is correct completely, yeah.
Let's just move further to the market. And so you've been obviously back and forth between Europe and Japan, just at a very 30,000-foot level. How do you see the Japanese insurance market overall?
First, the insurance market is, of course, one of the largest in the world. We know that the life insurance market is the second place in the world, and the non-insurance life market is, I think, the third or fourth place. This is based, of course, on the insurance income the insurer gets from the policyholder. That shows that the insurers have a good business here in Japan. If you take a look at the market regarding the companies, we have, comparing to other countries, very little companies working in the insurance business. According to the FSA, last year it was 42 life insurers doing business here in Japan and almost 55 non-life insurers. And there are total 22 or 23 foreign insurers doing business here in Japan. So that makes it actually, if we exclude the foreigners, less than 100 companies. Within the EU, the most insurance companies are in France with more than 450. Around about 150 would be life insurance companies, followed by Germany with 350, with more than 100 life insurance companies. And after that, it's UK with approximately 300 or something. Overall, in Japan, in the insurance businesses, we have not so much companies here in Japan, but we have groups of companies. Big groups, as on the Japanese market, is typical. So we have in the life insurance businesses as well as in the non-life insurance group companies holdings. This is why the Japanese insurance business and insurance market could survive the last 30 years. Specifically also in the life insurance area, because we had in the 90s specifically the changes, the deregulation, etc. We had this rate of minus 0.1 or something, or already I think sometimes also -1. This is why other countries looked over to Japan, how they can survive in such kind of development or development in the past 30 years. And actually, due to a situation that insurance companies, holding companies working together, so they could survive in a way that they helped each other to survive the situation the past 30 years. But the thing is that in the past 5 to 7 years, we see a change of this development. And we think that holding companies will not exist in the next 5 or 10 years in the way they existed until today. So this would be actually the possibility for foreign companies to enter the insurance market here in Japan. I think this is also something the government realized. That's why also they set up this Financial City Tokyo Association to provide information for foreigners, foreign insurance, foreign investment companies to invest in insurance business, because the guidelines from the FSA has been translated since 2 years now. The licensing procedure can be conducted in English and not only in Japanese. Trying to find solutions to get foreign insurance or foreign financial companies to Japan. I think that will be increased in the next few years, or maybe in the next 5 to 10 years, and will provide for companies outside Japan to come to Japan.
That would be welcome. Given the numbers that you stated, like 22 foreign insurance companies in Japan, obviously some of them might just be doing commercial business and not necessarily consumer, but quite a few of them do. And if you compare that to the banking market, where really we don't have any foreign retail bank left in this country operating at any scale. So the insurance market, at least by the number of foreign companies participating, seems to be a bit more international than the banking market.
Yeah, that's true. The consumer insurance market within the area of the foreign insurance, it's still holding here in Japan, as the consumers or the Japanese population is quite dedicated to insurance for a long time. And if you check this statistic, you will see that almost 90% of households have a life insurance, which is quite high compared to other countries, as we mentioned before, Germany, UK, etc. And this shows that there is a business or market for insurance to provide products and to provide insurance contracts to the Japanese population. When I was here during my PhD and did research, I attended in some associations and also for research group, which I'm still a member of. And I learned at that time there was a saying here in Japan that if you do just collect your money monthly, this is a kind of triangle, which is called in Japanese chokin wa sankake, because it comes more and more with time. The saying goes further with the part that insurance it's not a triangle, but it's a square. The square means because at the time when you enter to an insurance contract, you have already the risk covered for all the time. This is something which you can see in the Japanese population, because they want to get the security. That's why in some cases, foreign insurance companies who have subsidiaries here in Japan, they are still doing their business here in Japan. In life insurance, it's different because the life insurance market from foreign, there's actually, among the 22 foreign insurance, there's only one. Life insurance is the Zurich Life Insurance here in Japan. And I know that, for example, the German Allianz Life Insurance is not doing a new business anymore, but they did for a long time. So they have only their old business and just providing the business regarding the old business they sold in the past.
So the square basically includes downside protection, while the triangle is really just saving your money and having a compound interest on it. Okay, that's an interesting comparison.
Yeah, it's an interesting lesson from the Japanese, and it's also written in every school book. When you talk about insurance and about financing, you will find the saying almost everywhere in insurance.
Since we talked about the desire to have this downside protection, there's always this thought about Curious Japan. And I think when we met before, we talked about the insurance kiosks that you have in Narita, where if you haven't been thinking ahead and buying your travel insurance together with your plane ticket or your tour package, then even after you pass passport control, you still have a chance at the kiosk, which looks like an ATM machine, to purchase some travel insurance on the spot. And we haven't really seen this anywhere else, right?
No, this set of ATM vending machines for insurance, which you can find also here at Haneda Airport. I was surprised when I saw it for the first time. And I saw also people using this kind of machines to buy their insurance for their trip. I think this is something which we have to consider when we think about the Japanese distribution market, because this is a very, very big distribution market, because they're trying to distribute insurance where people pass by. So you have this example with the vending machines at the airport. If you go to the convenience store, you can nowadays make an insurance contract in the convenience store. Then after the distributors Hoken no Madoguchi, which you can find also everywhere in cities and overall Japan, you have such kind of possibilities to provide insurance contracts to the policyholders. Is of course something which you cannot find so much in other countries or in the European Union. But we have to differentiate between the life and non-life insurance business, because the non-life insurance business is distributed here in Japan via agencies. This is the number one, and for general insurance distribution. And these agencies, they have not only the function to sell the insurance, they also consult, they solicit or calculate insurance premiums. They take the received insurance premium and issue receipts and delivering insurance policies to customers. This is also based on the historical development after the World War II, when many people needed this security and where the insurance company started to selling insurance contracts. The further possibility is the direct distribution. Of course, we have here in Japan also insurers directly via internet, for example, operated by insurance companies or the agents. We have in this case also divide into two different possibilities. The one is the offline transaction, which means a policyholder can go on a website and just push the button that he wants to enter into a contract and then meets the salesperson or the agent to conclude the contract and getting all the materials and then returning the application form, because here in Japan, you're required often to use your seal. And in this case, you can just seal the contracts and give it back to the agent. As the online transactions, the applications made directly online, the premium payment is uniquely processed and are usually settled with the credit cards. If you take a look on the life insurance business, the key distribution channel for the life insurance business is a bit different because the most of them are done via the insurance brokers or financial advisors. Many banks provide them, also give insurance contracts to us. And most of them prefer in Japan life insurance directly from the insurer because the population mostly need the situation that they are in exchange with the contracting party, which is the insurer, that they being heard by the person, that they can ask their questions directly, etc. And this is why also Japan in 2018 amended its regulations regarding insurance distribution, because the distributors now have to provide a memo of the counseling situation, to write down all the information they discussed with the policyholder, etc., which was not regulated prior to 2018 or 2020. This is quite important because many distributors use the situation to sell to consumers who didn't need actually such kind of facts, that it was also very public. The most important is the Kampo. Kampo is the postal insurance made very easy. It has no such high premiums. 3 years ago, it came out that they also sold insurance contract which the policyholder didn't need. And this situation resulted in the case that the managers resigned from their positions, and also they were not allowed to sell insurance contract for 3 months by the financial supervising authority. So it depends on what kind of area of insurance here in Japan we are looking at. Depending on that, we have different possibilities for distributing insurance contracts.
Wonderful. So I think we've come full circle. We have discussed quite in depth the legal aspects, the history of the law, the influences that come from different foreign regimes. We've discussed establishing an insurance company, launching products, and also finally covered fusion, which is quite amazing breadth and depth here in this conversation. So thank you very much, Köksal, for taking the time and sharing your expertise. This is a very unique topic. There's not many international experts that can talk to this at this level of detail. So really appreciate you taking the time.
Thank you so much. Also, as I mentioned at the beginning, giving me this opportunity to talk about this, and looking forward to meet you on another occasion and talk further about insurance in Japan. Thank you.